Disney's earnings call yesterday, CEO Bob Iger made an announcement that the company would be combining Hulu content with Disney Plus into one app.
I mentioned at the first earnings call that I did after I came back that everything was on the table. And in fact, everything was on the table, but I've now had another 3 months to really study this carefully and figure out what is the best path for us to grow this business. And it's clear that a combination of the content that is on Disney Plus with general entertainment is a very positive, is a very strong combination.
Joining us now is Tom Rogers, GameSquare Executive Chairman, former NBC Cable President, and a CNBC contributor. And he's going to play a stock market analyst right now for us, Tom, whether you like it or not. I thought there were some positive things that Iger said yesterday. Why is the stock down below 100, down 6% today? The subscriber losses, Tom, was that a surprise?
Well, this stock always trades on subscriber losses, but for other reasons, I think the market has gotten this right. First, we got a pretty good hint of what's going to happen to Hulu. I can't imagine that Disney would begin to integrate Hulu and Disney Plus without having figured out over the last 3 months that Comcast's a seller, not a buyer. And so I think that's how that asset will end up. I think we also learned that Disney Plus is just growing too slowly, and it needs general entertainment programming to recatalyze its growth. That's pretty clear as well. I think that he made a very big deal about advertising and the future of advertising and getting Disney pricing per sub up by using advertising. But for the life of me, I can't understand why they haven't been pressed on how now for the 5th straight quarter, Hulu advertising revenue per subscriber is down. Hulu is the granddaddy of selling ads on premium streaming services, been doing it longer than anybody else. And for 5 straight quarters, their advertising revenue per sub is down, but they're pinning a lot of their hopes on driving pricing per sub for Disney Plus on the basis of advertising, and that just was unexplained. And then, of course, I think what really has the stock moving down is legacy TV declines accelerated. And they're not at the precipice yet, but those declines are precipitous, and it's pretty clear they're going to become more precipitous. And while we've seen the whole streaming analyst world move from sub numbers to the question of profitability, where it hasn't moved yet and where all the media companies need to be pressed is the growth of streaming as it moves toward profitability ever going to make up for the decline in the traditional television business? No one has really demonstrated yet how they believe the whole left, by the decline of legacy media, is going to be made up by streaming. And until that happens, it's really hard to get too excited about anything on the streaming side, because that's the essential question.
Well, I was going to ask you, how can everything go down? I mean, we still consume content. It's the old digital nickels and whatever it is, analog dollars, digital nickels. So that's the new world. So people are cutting cords. Legacy TV's bad. Streaming's never going to make any money. What are people playing games all day long? Why can't you monetize great content anymore, Tom?
Well, I think you can monetize it. I think, clearly we're not talking about digital pennies here, because there's substantial revenue being driven off the digital businesses. But remember, what you got to compare it to is the best media model ever known to man, that cable and satellite channels were paid across every home, regardless of how many homes were watching it. And streaming, you have to get your money out of homes that are actually watching and using, and then not churning when they're finished with their favorite show. And that's just a much tougher model and a much tougher business. So as you look at media growth, you have to say, is that media model that's being moved to ever going to substitute in terms of quality of earnings relative to the model that all these companies used to live off of? And that's still a totally unknown question. I think what we do know, I've been saying for a while, that Netflix will be the most valuable media company in the world. I think you can probably say it already is. When you look at Disney and separate out the parks business, it's a very good business, but I kind of look at it in the travel and leisure sector more than a true media business. When you look truly at the media side of Disney and compare it to Netflix, Netflix is already a much more valuable company.
I would have thought that, narrowing the streaming losses, that's what everybody wants. Let me ask you about is Comcast happy there was a floor on Hulu? I mean, is when you get $9 billion, are you going to say thank you? Is it worth less than that?
Well, the question of what Hulu is worth is a question of what programming comes with Hulu. Does it come with FX programming? That issue of Hulu as a distribution entity that has 40 million plus subscribers versus Hulu as a programming entity with the value of that programming built into it are two separate things. And I don't think Disney ever would sell the general entertainment assets behind Hulu that it owns just for the purposes that Iger said. He needs to combine that with Disney Plus to propel that service. And so if you're looking at just the Hulu shell, so to speak, $9 billion is a pretty good gift.